end of trade, it's, I think, persistent where you are seeing considerable weakness. But the top 5 Nifty losers are all IT names. It's Tech Mahindra extending the losses now to 6%. TCS, Infosys, Wipro, HCL Tech also seeing cuts of close to about 3%. So that's taken a big knock today on expected lines. Autos too, a bit on the back foot. Seems like the GST bonanza, GST reforms 2.0 has already played out. Stocks have done very well. So for today, Eicher Motors, Tata Motors are down close to about 0.5%. We should also pull up M&M and Bajaj Auto flat. So it looks like, at least for now, things are on the quieter side. On the way up, it's life insurance, as Prashant was pointing out. HDFC Life is your top gainer. Adani Enterprises is one of the big movers. Here, there is a Jefferies note. They're bullish on the stock. Target price is 3,000 rupees. And Adani Enterprises is moving up quite well. Eternal is seeing buying. This month, it's seen a rally of nearly about 8%. In fact, many of the Adani Group stocks are continuing with the excitement from Friday after they got a clean sheet from SEBI. So Adani Ports too on the buying radar. But IT down, and the other sectors are not, stocks are not seeing big moves.
Well, that's right. You know, a few stocks actually that are moving up. SCI, they have signed an MOU with BPCL, HPCL and IOC to jointly build and operate a fleet that strengthens India's shipping capacity and energy security under the Atmanirbhar Bharat Act. So that's why, in fact, that stock, in fact, is moving up on very, very large volumes. You have Garden Reach as well. That's up close to around 5%. Anandraj, I think Rima mentioned that stock is up and about in today's trading session. So big move is what we're seeing on all of those names. A quick word on the tech index. Well, it's still down close to around 3.5%. It's just recovered, I think, 100 points from the lows of the day. And, now it's 200 points recovery from the lows of the day. The low of the day is around 35,100. By the end of today, you'll want the tech index actually to recover considerable amount of this ground, which will tell you the kind of interest that you're seeing in the sector, because that's seen a bit of a run-up. Today, it's under the weather because of the H-1B visa issues. But, let's see whether or not there can be some recovery. A few more stocks, you have Vodafone Idea. That's up close to around 1.5%. So it's seeing some kind of follow-through buying. Sagility is down 2.5%. Rima mentioned that note on Swiggy. That as well is little under the weather. So the Nifty opens up in the red on expected lines. The problem today is that the tech index, well, that's giving no support whatsoever. The Nifty Bank, I think, is doing a relative outperformance if I get that one up for you on the screen. Let's see whether or not this dip gets bought into.
Such is the negativity surrounding, the sentiment has been hit. Even a company like First Source, which is clarified, they have zero impact, no H1 employees, on H1B visa. Even that stock today has taken a hit of close to about 2%.
Absolutely. The index is down about 3% or so. So there is that pressure, which is very clearly showing up. The number one volume-led gainer on the NSE is Urban Company. Urban Company had a fantastic, last week, of course, it listed. It's only 4 days old in the market. Today is the 5th day. So opened at $160 and stocks now at about 190 rupees right now. I mean, I think it's not the 5th day, it's the 4th day in terms of the listed space. Listed on the 17th a few days ago. So 3.5%, very, very large volumes coming through, 191. NetWeb is moving up 4% now. It's of course, a new all-time high. As I was saying, I mean, it's up 25% this year. It's up a lot last year. I mean, of course, 2024 was the re-rating year in that sense, but the move is continuing. Silver Bs are up about 3% or so. I don't know if you can pull that up, but yeah, I mean, it's coming up. Silver, the ETF is also moving a little high. I'm not sure if there's a move as far as silver prices are concerned. On the downside, apart from the IT stocks, there isn't very much else. It's all IT, which is taking a knock right now. Mihir Vora is with us, Chief Investment Officer at Trust Mutual Fund. Mihir, great to have you with us here. Thank you for your time. So I guess first question is IT. What else? What do you think earnings impact, as we've heard from company after company and exchange releases, etc., seems to be minimal. But, when uncertainty goes up, not just what's happened, but what may happen in the future, caps valuation multiples, doesn't it?
Yes, it does. And in any case, we've seen that the large cap ITs were not the fastest growing parts of the market in any case. So this certainly does not help sentiment. We have seen that there is some differentiation between companies which have less of H1B dependence versus companies which have a little more. But I think it's really, markets today reacting to the initial news. But in any case, if I were to take a 1 to 5 year call, then given the current business models, the large cap IT companies especially don't seem to be the fastest growing parts of the economy. I'd rather stay with the domestic themes.
So don't buy, even if you have a 2, 3, 5-year kind of horizon. Don't buy IT.
Absolutely, because the domestic and the segments in which the government is focusing on, like investments, consumption, etc., have a headwind. Have a tailwind for them. Whereas in IT, you're only going to see incremental headwind. So while the US has clarified that the H-1B program and the fees will not be on a retrospective basis, it does not apply to the existing stock of holders. But incrementally, obviously, it's going to be more expensive, and at $100,000, I think the H-1B program pretty much becomes very, very selective and unviable for the normal kind of IT services that we were used to. Specialist roles, etc., will continue to happen, but that'll be a very minuscule portion. So obviously, the IT sector will face headwinds in its current business models unless they do things differently.
Well, indeed. Hi, Mir. Good morning, and good to see you, Ben. Tech seems to be going through its own share of problems. For the time being, though, there is some kind of recovery that we're seeing from the low point of the day, so we'll see how that one goes. Let's focus on the domestic themes then. Trump seems to have stole the thunder away from the GST 2.0. Let's talk about that. GST 2.0 goes into effect from today, and we could be bracing for the best possible consumption period. Possibly. The next 30 to 45 days could see a lot of buying. At least that's the hope. Consumption-related names as well as on autos. How much of this good news is in the price, and how would you approach these sectors?
Absolutely. The PM himself has said, go forth and buy stuff. So obviously, that's going to create a good tailwind for the discretionary consumption segment. I think not only goods, but also services like airlines and hotels, etc. We are in for good times. And the fact that companies have done proactively a lot of pricing adjustments to at least create that buzz around the whole GST cut. So the timing was appropriate. We have the Navratri season and the festive season now starting for the next few months. So it should be good times for consumption. I think the sector has been quite under-owned for quite some time. So while stocks have reacted and have gone up in the last 1 month or so, I think if you look at the portfolios of a lot of mutual funds and investors, there was a lot of underinvestment in the sector. So you might still see a lot of incremental money flowing into this segment.
Okay, all right. Mihir, what about market construct itself? We have had our own set of headwinds, particularly in the last 12 months or so. Same time last year, the markets were extremely buoyant. Earnings growth was expected to pick up. We're talking about, even scaling higher from where we were at. Last 1 year, no returns. That's why retail is getting a little bit frustrated, because they're not used to this sort of a period after 4 very, very good years. So now the maturity of the investor will come into play. What is your approach with regard to the index? We are still holding strong, given the headwinds, whether it was geopolitical issues, whether it was with the lack of earnings growth, and the entire Trump saga that's played out. Do you think the markets can hold their own? The recent lows will be protected, the lows of this year, and the markets maybe see a time correction?
Well, we've already seen a time correction. As you mentioned that we've not made returns at the index level in the last 1 year. But the big issue is that we have to probably select which index we want to look at, because we were just talking about IT. That's the second largest segment in the Nifty 50, and the largest, of course, is banks and financials. In IT, there are headwinds as we just discussed. In banking, while everything is hunky-dory, valuations are cheap, we are still not seeing credit growth, which the hope is that it will happen for the second half. So IT, I'm not expecting to do much in the next 1 year or so. But banking, a lot depends on banking and the consumer part of the segment, apart from the traditional ones like government consumption, government investments, defense, etc., to drive the index. The good thing is that it was very lopsided for the last many years in favor of financials and banking as far as index returns are concerned. Now we'll have to depend a lot more on the other segments for the index to work. So it's going to be, my guess is it's going to be a year in which stock picking will be more important than looking at the index levels.
Mihir, let's focus on the metals pack then. There is hope that there can be a recovery from here on. The stocks, actually, to be fair, they have been the outperformers in the last 30 to 45 days because there is hope that China is getting its act together. There's going to be a lower amount of supply coming out of there, and we're bracing for some price increases in all probability post the monsoon. It's a tricky sector, but I've seen you in your earlier avatar as well. Sometimes you don't want to play the core metal plays. You look at some pipe makers. You look at other ways of playing the metal theme. How would you approach this space? Because clearly the government's measures, Chinese measures, and the Fed rate cuts, bode well for base metal prices. So your approach?
Base metals for me is always a tactical trade. So even if prices move up in the short term, they don't last, frankly speaking. In metals, the plays are more on the precious metals side, where unfortunately we don't have a lot of stocks to play with. It's mostly the ETFs which have direct exposure to commodity that we can play. But metals like steel, I would say, are more of a tactical play. There might be a structural rally in things like copper, but again, we don't have a real pure play, copper play in the country. So while you might want to take a view on some of the metal stocks, it will be more tactical. And in the metals like gold, silver, copper itself that matter, we don't really have a direct play on the underlying.
And what about the pipe makers and the likes? Would you look at that? Because, construction could pick up. So some of these pipe makers which have made no money whatsoever. There are the other suppliers with regard to the oil and gas space. Water could be in a bit of a headwind because we've heard about collection issues. But the hope is second half of the year will be better. So anything you like from that pack?
Absolutely. So the pipe makers have done well or expected to do well, irrespective of the metal prices. So I wouldn't really play them for the metal price. But the fact is that given the buzz that we are seeing in construction activity and the continuing of government spending, etc., pipes in general should continue to do well, especially the ones which are more linked to real estate, because we do see that real estate construction in urban as well as in the rural areas should continue to do well.
Yeah, no, absolutely. And I think that's an important point.
And the other big one, and on the in pipes, the other big segment is, of course, in the structurals, which is linked to the government spending on infrastructure like your buildings, your airports, your railways, etc. Where again, I think given the state of the economy, the government is unlikely to let up on the spending on the infra part also. So I think the structural pipes, as well as the pipes used in your water for residential purposes, etc., should continue to do well.
No, those are important points. By the way, the market has recovered, right? The market is down only 40 points now, and it's come off nicely. The low today is 25,200, and we are at about 25,290 nearly. So that's the lift that the index has got. And the IT index is also recovered. It was down about almost 4% at one point. The low is 35,145, and we're at about 35,600. So, it's down 2.6% at this point in time. So coming up very, very nicely at this stage. Urban companies now up to 196. So about a 6% pop now on Urban Company. Any thoughts here? Mihir, Urban Company, did you participate in the anchor round or later since listing?
Well, I won't comment on individual stocks, but as of now, we don't have any holding in that particular name, and I would refrain from making a comment on the stock.
You like the business? Do you like the business, Mihir?
So in general, we like the scalable businesses, where the TAM is large. So you have some of the other ones. We have some of the other ones in good measure, like the delivery services, like some of the online ticketing services, online auction places, etc. So in general, we like the network effect kind of a space per se, and we have a good exposure to this segment, the new age B2B and B2C companies. Yes.
Okay, thank you very much, Mihir, for joining in. Look forward to the next conversation. For now, let's kick off Corporate Radar. We've got Rakesh Sharma, Executive Director at Bajaj Auto, who's joining us as the new GST regime gets underway. Thank you very much for joining in. And some of the top discussion points today are, 1, the GST cut on bikes below 350cc, automakers passing on the GST benefits, and plus update on inquiries after the GST cuts. Thank you very much for joining in. First, on an average, can you tell us the reduction in prices on account of GST for Bajaj Auto, and over and above that, are there discounts, and how are the inquiries looking?
Good morning. Yes, it's a very important day today, as there's a lot of expectation in the market. The news has penetrated right across India, from the urban and off late even in the rural areas. And there has been, in the last 1 week, a very healthy uptick for inquiries. And most people, particularly in the festive states, wait for the Navratris to begin so that they can take deliveries in the auspicious period. We have passed on, obviously, the entire GST reform and the entire GST cut. So in motorcycles, it ranges from, depending on the bike, from rupees 5,000 per unit to about 20,000. And three-wheelers too, we've passed on the entire GST benefit, which amounts to almost 28,000 rupees. We have gone further. There was an expectation that this little distortion, which is there on the above 350cc bikes, would get evened out. But when the announcement came, the 350cc's are being taxed at a higher rate. So we've gone further and we have maintained our prices of the 350cc plus range, just so that the consumer in the festive period doesn't see at least a disruption over there. In addition, as part of the festive spirit, we've made it attractive, particularly for those people who are going to take finance. And we believe that this cut should see better penetration of financing. So there is a little bit of schemes on processing fees, etc., for customers who are going to be taking finance. So they will see an attractive offer over there.
So
all that combines to give a really healthy, 20,000 rupees saving for an average 150cc type of motorcycle.
Okay. And over and above the GST, the cut in prices on account of GST passed through, are you giving any festive discounts?
Well, no discounts, like I just mentioned.
There are incentives if you take, for financing of the bike.
Yeah.
That is there. But other than that, no discounts?
No. There's no discount on the bike. I think there is a very healthy discount which the government has handed over to the customer. So I think that...
Mr. Sharma, how are the inquiries? Can you give us some numbers?
Well, it's very, very premature to give you numbers of inquiries, and I don't know how relevant that would be. But I can say that there have been a lot of calls and a lot of the visits. I would say that in terms of people calling, people visiting, there is a marked uptick in the last 1 week, gone up by 20-25%. So there is a lot of interest in the potential customers.
All right. Hi, Mr. Sharma. Good morning and good to see you, Ben. So on a like-to-like basis, festival to festival season, what kind of numbers are you working with? Two-wheeler, motorcycles, as well as if you tell us in terms of EV. What is the rough growth you're looking at? Y'all are giving discounts. The government has given the set of discounts as well. So it should be very buoyant times, right? What is your estimate?
I think it should be buoyant times. I think most importantly, it will reverse the declining trend which the industry was facing. I mean, we just step back. FY25 ended at 6% growth. It started very well, did well in the festive, but Q3, Q4 of last financial year were negatives. Q1 was a negative, and year to date, that is April to August, the motorcycle industry was at -1%. And we were all expecting it to be around, between 3 to 5% plus. So I think that this reform is going to be quite a quite an inflection point, because it hopefully will reverse the negative year-to-date trend into a positive one as we go forward, not just in the season, but hopefully beyond the festive season in quarter four as well. Because some of the growth inhibitors which we were seeing in the last few months, which were around inflation, particularly rental inflation and the reduction of disposable surplus and the uncertainty around inflation, those forces will get mitigated. I think the customer sentiment will become much more positive when they see so many categories, the prices coming down. And that was a key reason. The financing companies were a little bit cautious. With disposable incomes going up, inflation coming down, I think they will feel a little bit better about risk assessment, and finance penetration should improve. So when you put this together, I think this will be quite a pivotal in reversing a negative trend into a positive one. But having said that, I was doing some maths, and we will still be below FY 18-19 in the industry. So there is something. FY 18-19 was the peak, and it will be a touch and go. But hopefully, let's see, fingers crossed, that we can cross the FY 18-19 peak by the time we close the year in March 26.
Mr. Sharma, hi, morning. Prashant here. Could you tell us, because your export proportion is also quite significant relative to other players, in the domestic two-wheeler segment, what's the sort of a proportion of your sales which comes from the local market? And second, April to August this year, FY26, compared to those same months last year, there seems to be a bit of drop in market share for you, about roughly 90-100 basis points or so. I just want to go back to the point that Rima asked about other incentives, etc. What else could you do to, regain market share here? And if there are any specific reasons for this, is it intensifying competition in this segment? Go on, sir.
Well, to knock off your first question, the international business on volume terms is about 40-45%. Of course, during the festive, the domestic picks up. But over the year, the volumes are 40-45%. In value terms, it is about 45%. That's our share of our international business in the Bajaj Auto portfolio. Yes, from about 6 months or 9 months ago, we did start to see in certain segments a loss of market share. And a large part of that, I think, is competitive activity in terms of new product introductions by competition. And these have to be responded to. So that's very much in the cards, in the pipeline. Over the next few quarters, there will be a response on our strategic segment, which is the 125cc plus segment, with an array of new products coming in. If I rewind about 3 years back, we had the first mover advantage in terms of introducing new products into the freshly developing segment, which was the 125cc segment. So we raced ahead, and those products need refreshment. They need some more innovation, and that's about it. And that's what we are right now preparing for, and the next quarters should see that. I think that's the fundamental response, and all the other tactical stuff, of course, will accompany this fundamental action.
Okay. Sir, I think when, about a month back prior to this GST announcement, you had spoken about industry growth of 5 to 6%. Is that correct for domestic two-wheelers led by 125cc? Was
yes,
that your...
That's right. That's what
so how will that number change now with this GST bonanza and an uptick in volumes?
So that's what I was saying in the beginning, that when the year started, all of us were expecting around 5 to 6% growth. Correct. Because FY25 had closed at 6%, but slightly unexpectedly, for reasons of inflation, caution in the financing segment, we found that the industry actually degrew. And that is exactly what I said. But because of this change, the substantial benefit which the government has passed on to the customer, both in terms of both quantitatively and qualitatively, I think it will push the industry to reverse the negative trend and get positive zone.
So 5 to 6% industry growth guidance stays now.
Hopefully, it should get back. There is no reason for the industry to now not at least go back to the last year's growth rate.
Got that. Thank you very much, sir, for joining in. We will slip into a break. On the other side, we'll connect with the managements of Metro Brands, PNB and Shriram Finance as the new GST 2.0 regime kicks in today. Stay tuned.
Welcome back. This is Corporate Radar and you're watching CNBC-TV18. Well, keep an eye out on the markets. The bulls have used this opportunity to jump into the markets. The Nifty is now down less than 10 points. So it's a good recovery that we've seen from the low point of the day. The intraday chart comes up for you on the screen of the Nifty. Moving to the footwear maker, then Metro Brands. It's in focus. GST on footwear has been reduced at the rupees 2,500 point. The cut is from around 5% to 5% from around 12% earlier. Mr. Nissan Joseph, the CEO of Metro Brands, joins us on the show. Hi, sir. Good morning and good to see you in. Let's get some clarity out of you first. What proportion of your sales volume/value come from footwear sub 2,500 rupees? I was reading a couple of notes and some of them suggested around 40%. But you'll be the best analyst on your own company. So tell us, what's that number?
Right. Nigel, good morning, and thanks for having me. Yes, the number is in the range of 40%, but depending on the different banners we have, as you know, we have Metro, Mochi, Walkway, and a few other brands and banners. In the different banners, that percentage would be significantly different. For example, in our Walkway business, it would be a high portion of our sales fall into that 2,500 and below range. And in the Metro Mochi business, it would be somewhere in the 40% range. The other thing to note here, though, is that two things. One is, we are finally on parity with apparel, so that's exciting news for us. And the other thing is, not only does it affect price points at 2,500 and below, we'd also be re-looking at price points about 2,500 to about 3,000 to say, is there an adjustment we can make by sharing some of that discounting to get some products in below the 2,500 rupee range, right? So I think there's a lot of positive momentum here. The good news is, I think for once, this is the first time that we've had a GST revision where we've not had to take up GST prices. So we're quite excited by it. Do I think it means everybody's going to run out and start shopping tomorrow? Not necessarily, but I think in the long run, it should bode well for consumer demand.
Okay, got that. Fair estimate then. Before we get to the benefits of GST, I want to ask you about the existing inventory clearance. How will that pan out? How much is it? How much inventory are you sitting on?
A lot, as opposed to all of the 40% we're sitting on it currently. So, and that's not an issue because, we programmed our registers to automatically take the differential and give the consumer that benefit of savings, right? It may not be easy to communicate on every single price point that particular discount, but I think when they go to checkout, they're definitely going to see that we've given them the benefit of the GST decreases.
Just one point. Good morning, Prashant here. What could you give us an overall sense of, what percentage of the portfolio is impacted by these reductions for you?
Yeah, Prashant, good morning. I think it's definitely in the 40% range that you're going to see, especially with Metro and Mochi carrying the brunt of the weight of our business, right? However, we also have brands like Crocs and Clarks that may not benefit much from it. But on the flip side, our walkway chain will benefit significantly from it. So averaging it out we're going to see price reductions in about 40% of our chain inventory.
And walkway is only about 70, 80 stores right now. Of course, I'm assuming that number will go up significantly. So the overall portfolio will also shift as time goes by, right?
Absolutely, correct.
And 300 to 3,500 rupees is essentially the range at walkway.
No. Walkway is under 1,000 rupees.
Oh, all of it is under 1,000.
Well, I'm talking about the average is under 1,000. But when you look at our Metro Mochi business, that's what you're referring to, Prashant. That runs about 3,000 plus. Okay.
No, I was saying that starts at 300 and goes up to walkway. Starts at 300 rupees.
Well, I think from a velocity weighted standpoint, it has a broad. It goes from 300 to 2,400. But if you look at the price, the velocity of goods over 1,000 rupees, it would not be as significant. It'd be in the low teens, whereas 80% of it would be below that 1,000 rupee range.
You've also, I think, said that over and above the cut in prices for sub 2,500, you will look at additional discounts.
Yeah, Rima, the whole point is, there's a consumer psychology that, when you hit the 2,500 price point, it brings affordability to a lot of people. So if you have something that sells for 2,700, for example, right, would we be benefiting the consumer and ourselves by just taking it down to 25 because we would get 140 rupees of GST benefit, we'd have to chip in 60 rupees of discounts. But does that get a consumer demand? Because we know it's quite elastic, the demand price elasticity there. So would we want to take benefit of that? These are things that we're going to keep measuring and seeing how we want to attack it and address it in the days to come.
Discounts are only for products which would be priced, say, 10 to 15% above the 2,500 mark. Is that correct? So that you can bring it in the lower bracket where the lower GST rates are applicable.
That's correct. And, if anybody had a 2,599 price point, that's almost obsolete anymore, right? So
what's your own internal estimate on account of these GST revisions? What could be the extent of incremental sales? What are you working with?
Yeah, I think, I'd rather stick to what we've always guided. I think on a long-term basis, we can feel confident that we'll continue to hit our 15% CAGR growth over the period of time. If you look at, we've had a few muted quarters, there's no doubt about it. But if you look at our performance over FY19, we're up in the 100% range over FY19. So overall, we've slipped back a little bit from that 15% I guided to. However, we're confident that this kind of initiative gets us comfortably back into that 15% plus guidance for the long term.
Any intangible benefits, that you foresee with this lower GST coming into play?
I don't know about intangible, but I think another benefit is, as we go into end of season sale, right? There's a lot of products that might hit the 2,500 mark or might hit the 2,600 mark with the 20 or 30% discount we would give at the end of season sale. Now, all of a sudden, if you took it down to 25, it's no incremental discount to us as a retailer, but it's a benefit to the consumer. So, there are some advantages as we look into going forward, even going through the end of season sale period, which comes, at the end of this calendar year.
Got that. We'll leave it there. Thank you very much for joining us. And I think, if you're able to speak in about, 15 days, 20 days time, you'll have numbers, hard numbers, Mrs. Nissan.
That's right.
In terms of how things are panning out. But very useful. Appreciate it here on CNBC-TV18. Well, let's, talk to two financial institutions. We're doing segments, but financial institutions are basically entities which are completely economy facing, and all of this will show up in terms of borrowing, right? Mr. Ashok Chandra is Managing Director and CEO of Punjab National Bank, one of the largest banks in the country. And we have Umesh Revankar with us as well, Executive Vice Chairman, Shriram Finance, one of the largest NBFCs in the country. Gentlemen, both of you, thank you very much for joining us. Prashant here. Mr. Chandra, let me. It's a broader question, but also a specific question. The GST impact and implications, right? Those are the three talking points. Of course, early signs of uptick in consumption, festive cheer, GST, of course, is something we will talk about with both. And of course, credit growth implications, right? So, Mr. Chandra, as I was saying, this is expected, the GST cuts, etc., are expected to show up in a big way, especially in the auto segment and also the consumption segments. Could you give us a sense of how you are thinking about it? What is PNB's exposure in these two categories specifically? Consumption loans, auto specifically? Just give us a sense, and what kind of uptick are you expecting?
Good morning. Yes, I think today is a very, very landmark day as far as the simplification and the rate cut in the GST, which is getting implemented from today. See, this entire rate cut which has happened, it is going to bring a lot of relief to everybody in the country now. And if I can talk about a specific field-wise, like agriculture, if I can talk, agriculture, PNB has a very good exposure. We have more than 1.3 trillion exposure, and the way the reform which has happened by way of rate cut in the agriculture, the different segments, agriculture equipments, tractors, the spare parts. So all those things definitely it is going to bring good momentum in the agri sector. Farmers will be benefited, and a lot of relief is going to come to the rural development, rural sector. So I'm going to see a good traction going to happen in the agri sector because of this simplification and the rate cut which has happened in the agri segment. If I can talk about the retail segment, again, that is a game changer going to happen in the retail segment because of two things. One is that the disposable income of the person is going to improve, and the demand for the consumer goods and the vehicles because of the rate cut has brought it in the system. I think all those things are going to pick up in a very, very big way from the today onwards. So I'm going to see a good traction happening in the retail front. If I can talk about the MSME part, again, there is input relief is also there. And many of the MSME spare parts and the equipments, the machines, machineries, I think all the segment in the MSME segment, the segment also, sector also, are going to bring a lot of relief to the MSME people. And when the PNB is ready to provide all sorts of credit facility to all these segments, I think I'm going to see a lot of tractions happening in the agri, retail, and MSME in general.
Yeah, got that. In terms of credit growth, bump to credit growth, Mr. Chandra, would you like to put a number?
See, as of now, MSME segment is growing at a speed of around 18% in our bank. Q1 also we had 18 plus was the growth rate YOY. And as of now, when I'm talking to you, I think our growth is more than 18%. And with this simplification and the rate cut which has happened in the MSME segment, I think definitely 1 to 2% minimum growth I'm expecting in the long run. Retail segment also, especially the vehicle and the housing loan. Housing loan, again, if you see the cement sector, the cost has come down because of the lowering of the tax rate. I think, again, the cost of house dwellers also will come down. And definitely there will be a good demand for the housing segment also. So vehicle segment, I think a lot of things have happened. The one is the 28% to 18%. The rate reduction has happened in the overall vehicle space. Plus, if you say the spare part and the tires, all those rates have also been reduced. So I think going to be a big activity happening in the vehicle loan segment. I'm expecting that at least vehicle loan growth will be around 24 to 25% going forward. So I think 1 to 2% growth will happen in all the segment because of this GST simplification and the rate cut.
Got it. Good morning, gentlemen, and good to see you all in. Mr. Revankar, getting you into the conversation, but vehicle prices are likely to go down, right? Will there be enough uptick in volumes to offset this kind of price gap? What are your estimates?
Yeah, overall, there is an expected price drop. In fact, it translates into around 8% decrease in the price for the average vehicles. Uh, at the same time, I think manufacturers also are likely to give less discounts. Earlier, the discounts were high, and now the discounts will be lower. So, price to the customer, there may not be a big difference. There will still some difference, but may not be significant. So, I feel overall it is a good sentiment. Definitely, yes. And during the festive period, when normally people buy new vehicle, I think there will be inducement for the customers to buy new vehicle. And for a long time, people have postponed buying a new vehicle because of steep increase in price in the last 3 years. I think this is a good opportunity for the people to buy a new vehicle and upgrade themselves.
Okay. So when we last spoke to you, Mr. Revankar, you said that this year, courtesy the GST bonanza, loan growth should be 17 to 18%, higher than 15% that you had earlier started the year with. Is that still on track?
Yeah, I said for this quarter, there will be a higher growth because it's a festive period. But whether it will keep the momentum for a long time, we are not very sure because there are other uncertainties like the US tariff that is still playing on and having some impact on certain MSME segments. So that we need to really see, and the real impact of that will be seen in the next quarter, because this quarter domestic demand will keep the momentum up. But from next quarter, we have to see how it will span out.
So for this quarter, what should be the loan growth that you see?
Yeah, this quarter we should be growing higher by 2 to 3% more than the previous quarter or previous year.
Got that. And in H2, the second half of the year, you're clearly seeing some headwinds, which could limit the growth on account of what's happening on the tariff front. Would you be able to explain that in greater detail about, what could be the actual impact on your numbers?
The impact to our number will be minimal. See, we will keep growing at around 15% as we guided in the beginning. That may not change much. But how much is the impact for the MSME and how government is going to support the MSME in different ways? The GST is definitely a big step government has taken. But then maybe the industry may be expecting certain other measures like the subsidies on the interest rate, or maybe reduction of the power tariff. Those things are there. There are some expectations which they are in dialogue with the government, which if it is possible, then MSME segment will keep moving and growing.
Mr. Revankar, we'll leave it there. Thank you very much for joining us, Mr. Chandra. Appreciate you joining us here as well. Really, thank you both for your time this morning. I just want to quickly make a mention that the market's almost back in the green. So that's quite remarkable. 10 points lower. That's it. 25,300 is where the Nifty is at. And Urban Company now nearing 200 rupees. So that's something which we've highlighted. Still remains the number one volume-led gainer. Started at about 191 and 198 now nearly. And Anantraj is back in the mix. Anantraj is up 5.5%. Huge volumes on Anantraj at 675 coming through here. And the other ones, Garden Reach and NetWeb, etc., we've been highlighting. Look at Adani Green, which is picked up. Adani Total, Adani Green. So the Adani stocks are back in focus here. So these are the two names with large volumes. And Shalby Hospitals is at 264. It's up 10%. It's gone up like a rocket. So it's a big one coming through on Shalby. I can go down the list, look at something like a Piccadilly. Piccadilly is at about 770 or so. That's a 6% move coming through. So lots of stuff, it's kind of sort of broadening out what we're seeing out there. Piccadilly is the other one, apart from Shalby that we pointed out. Now, Union Home Minister Amit Shah, in an exclusive conversation with Network 18's Group Editor-in-Chief Rahul Joshi said GST 2.0 reforms will be remembered as one of the greatest in history of the country. Some of the snippets of that conversation. Let's just play them out.
जीएसटी के कारण 16 प्रकार के बिक्री से जुड़े सभी करों का ऑक्ट्रॉय से लेकर बाकी सारी चीज़ों पे, एक्साइज, सेल्स टैक्स, कई छोटे मोटे मनोरंजन कर था, ये सभी का एकीकृत खाका बना। पूरे देश भर की एक इलेक्ट्रॉनिक बिक्री कर प्रणाली बनी, ई-वे बिल बने, और जीएसटी के इतने सालों की यात्रा में 200 से ज़्यादा छोटे मोटे बदलाव कर उसको लोकाभिमुख भी बनाया और टीथिंग प्रॉब्लम समाप्त भी की। ये करते 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 देश की इनकम भी बढ़ी और इतना बड़ा टैक्स का कटौती 80 साल में कभी नहीं हुआ है जो अभी हुआ है। ढेर सारी चीजों में इस जीएसटी रिफॉर्म से फायदा होने वाला है। मैं मानता हूं ये बहुत बड़ा कदम है और इससे जनता का भरोसा बढ़ा है कि अगर हम टैक्स भरकर सरकार की नेट को बड़ा करते हैं तो सरकार टैक्स की कटौती कर फायदा जनता को ही पहुंचाएगी। और ये भरोसा आज़ादी से अब तक अदृश्य था, पहली बार वो दिखाई पड़ता है कि कोई भी सरकार अपने बढ़े हुए टैक्स को ये कहकर प्रोत्साहित करेगी कि भाई आप टैक्स भर रहे हो तो अब हम टैक्स कम करेंगे, तो ज़्यादा से ज़्यादा लोग टैक्स के नेट में भी आएंगे। मुझे विश्वास है इनकम भी कम नहीं होगी,
इन्वेस्टमेंट बढ़ेगा,
इन्वेस्टमेंट बढ़ेगा, बाजार में एक प्रकार से तेजी भी आएगी और लोगों को सस्ता भी मिलेगा और यहाँ उत्पादन की गतिविधियां भी बढ़ेगी और देश की निकास भी बढ़ेगी।
Okay, that's an important opinion. By the way, Asia's firmly higher today. Nikkei is up over 1%. The Taiwanese markets, Korean markets are also moving up, moving quite smartly. So there is support coming in from Asia. We're dragged down by the cuts on IT, limited now to 2.5%, but that's been the big drag. Other than that, even the pharmaceutical index, the Nifty Pharma Index, is down about 3/4 of a percentage point. But holding flat now at the index level, Vinay Rajani, Senior Technical and Derivative Analyst at HDFC Securities, is now joining in. Vinay, your thoughts on the first 45 minutes of trade? What is the call for the day and your stock calls?
Yeah, good morning and thanks for having me on the show. So Nifty has absorbed the supply which has come in the early morning, and primary trend has been up. We have seen a correction of 230 points odd from the recent swing high of 25,448. But the primary trend has been up. Global market has been supporting. Broader market participation is going on. Sector rotation is fine. So overall, the sentiment is positive. Just because of the IT sector, it has opened gap down. Though we have been underperforming the most of the global markets and emerging market, but the primary trend and the way we have seen in last 8-10 sessions, Nifty has improved. I think overall trend is looking strong only. On Friday when we met, we discussed that there could be a possibility of running correction, and I suggested a support around 25,200 to 25,250 range. And today we saw that that range has been tested, and 25,211 was the low, and nice recovery has been registered after that since morning. So the trend is positive. I think rotation and the broader market participation will continue to do well, and one should remain bullish. 25,200 is a strong base. I think for the day it should not be broken, and overall sentiment should improve throughout the day from here. So overall, I'm expecting resumption of an uptrend.
Vinay, what would you do in terms of specific stocks?
Yeah, so PSU banks have been doing quite well, and the technical setup is quite strong for the index. And from that, Canara Bank looks very strong in continuation of an uptrend. So 118.9 should be the entry price. For traders, I would suggest a stop loss at 116. On the upside, I'm expecting a target of 123.50 in the short span of time. The second sector I would pick is the real estate sector. So after healthy correction, this sector has started showing some strength. So Godrej Property is one of the stock which has shown some reversal signs on the charts. So Godrej Property around 2145, one can go long. I would suggest a trading stop loss at 2105. On the upside, I'm expecting a target of 2205. So these both are a recommendation for 1 or 2 days, and with the mentioned stop losses.
By the way, the market, I think, is going to come into the green very soon. We're just about 5 points short, 25,320. So just the symbolism is outstanding, right? I mean, H1B, all hangama over the weekend and hand-wringing, anxiety, etc., etc. And you've got the index, which is now, the benchmark at least, with 25, 320, almost in the green from Friday's close.
You know, auto's moving up now.
Yeah.
You know, it started flat, but now Bajaj Auto, Hero MotoCorp up more than 1%. So there is strength. And some of the banking names too are higher.
Well, we'll take a break. We are back. Manisha on the other side. Commodities in focus in just a bit.
Welcome back. Let's shift our focus now to the commodity markets. Manisha is now joining in. Hi, good morning, Manisha. What are you tracking?
Thank you for that, Rima. Well, I'm looking at the crude oil prices because the last 2 weeks have seen some gains, and this week in Asia has also started on a positive note, as you can see, for the crude oil prices, more than 0.5% higher, and this is on the back of geopolitical tensions, the kind of statements that we've seen come in from Europe and also West Asia for that matter. Well, to begin with, the Russian airstrikes on the West Ukrainian part now seem to be threatening the Polish border, and that is where the concerns are. The Polish as a company, or rather a country, also seems to be now trying to defend, also is moving its forces there, and that is what has led to some premium in prices. The second thing really is about the 4 Western nations over the weekend, saying that they do recognize the Palestinian state, and this is even as US and Israel have been against it. Markets are watching out for the developments onto this one as well. The third thing is the European Union now proposing over the weekend a 19th sanctions package against Russia. What it also now includes is LNG exports. It also has nearly a huge number, really, 118 shadow vessels, some Chinese companies buying oils as well, and some other foreign companies also have found their name on this 19th package. Well, remember, European Union has been coming out with various packages, and we are looking at more addition into that. In addition to this, the European Union also says that going forward, they will stop buying LNG from Russia from 1st January 2027. Markets also looking at Iraq hiking exports to 3.3 million barrels per day. That is adding some supply pressure. This number is expected to increase to 3.45 to 3.5 as well going forward. And then, remember, this is the hurricane season at the Atlantic, and a second tropical storm, Gabrielle, has strengthened into a hurricane. The landfall is anticipated in the next 2 to 3 days, and if there is any disruption at all, we will see higher prices there. Remember, nearly 17% of Russian refining capacity is shut at this point in time, so any supply disruption will add further premium into prices going forward. I also want to take you through on what we've done in sense of crude oil prices till now in this year. We started firm at $75 a barrel for the Brent prices. We saw a high of $82 as well. We've seen $60 off a low as well into the markets, and to the lower side of the range is where we are trading right now at $67 a barrel. With everything that's happening in sense of geopolitics, Russia, Ukraine, tariff concerns, but it really has to do with the excess supply and concerns about demand. That seems to be keeping the prices in check. And this is about this year. But when you look at the prices itself, while we are down 10% for the crude prices in this year, it clearly is going to be a third straight year of declining crude prices the way we have been. It fell 3% in the previous year, and 12% of a decline is what we recorded in crude prices in 2023. So 25 clearly seems to be going the same way.
All right, Manisha, thank you very much for that. Well, we'll take a quick commercial break here. On the other side, it's our segments, the economy. Lata in conversation with Madhavi Arora of Emkay Global Financial Services and Mohandas Pai of RN Capital to discuss the impact of the H-1B visa hike for IT services and the Indian economy in general. Stay tuned.
Welcome to It's the Economy. After a brief early dip, Indian markets in general and IT stocks in particular have recovered. The rupee too, while lower, is not the worst performing currency today. But two issues about the impact of the visa fee hike. Important one, impact appears to be more on Indians rather than Indian IT companies, given that US companies are hiring a lot more under H-1B than Indian IT companies. Secondly, the hit may not be this year. It may be next year because this year's lottery is over. Now, given that the US is attacking India's goods and services exports, we need to watch the overall impact on India's current account, rupee, and indeed employment and economic growth itself. And to do exactly that, I have with me two stalwarts, Mohandas Pai, a veteran of the IT space, an investor, and of course now with Aryan Capital, and Madhvi Arora, the economist from MK Global. Mr. Pai, Madhvi, thank you very much for your time. Mr. Pai, is this a fair characterization? The impact is more on Indians seeking employment rather than Indian IT.
I think that's a very correct characterization, primarily because there are a lot more Indians applying for H-1B than any nationality, and they belong to many more companies than the IT service industries. The IT service industries hire people locally, they build their development centers, they're insulated. And like you said, Lata, it doesn't apply for this year because this year the lottery is over. And I think they're going to issue visas. Applies for the next year. That means it will take one more year for people to apply and pay any fee. I'm sure the number of applications will go down drastically. The stock of H-1B is not impacted as of now. The stock of H-1B that is not impacted as of now. Okay. And the stock, if nobody tampers with it, will last for a long period of time. So my view is the impact will be very less. And also, Lata...
So, Mr. Pai, Mr. Pai, I actually, you're both an investor as well as someone who has been an insider of tech. How are you seeing this evolve? Will more be outsourced to, eschew the H-1B impact? And also because there aren't enough IT professionals or similar talent people in the US. Do you see more getting outsourced at all? Is that the way we should take a positive read?
Lata, you saw the MIT study recently, right, about the use of AI in enterprises. How are global enterprises going to use AI? There's nobody but these IT service companies can help them. They have the framework, they have the vertical LLMs, they have the talent, they have the execution skills. So naturally, more work will move offshore. Lata, after the COVID, we saw a surge in GCCs. What does it mean? It means the CTO of global enterprises understood your people don't have to be in front of you to keep your IP and do great things for you. They can be anywhere, right? You can work in New York and you can be in Dallas or Florida. Now you can be in Bombay, be in Bangalore or anywhere else. So they have shifted the GCCs, 1,750, 1,800 GCCs. So more work will shift offshore because the work is fungible. The work is electronic and can easily be done. The skills are here. There's nobody else. The US doesn't have the talent and people are not doing that kind of skills. And Lata, you're seeing the data too, that, Indian companies pay the people in the US more than $100,000 for H-1B, plus the cost of travel, plus the cost of leave, plus the cost of so many things. And I think this idea that they're all cheap labor is absurd.
Yes.
I think more work will move offshore and offshoring will improve. And I think there'll be a tremendous jump here. So on-site work will come down. That's my understanding.
Okay. Madhvi, what's your assessment on the macroeconomy? Until now, we were only looking at this 2% of GDP impact of the tariff on goods exports. Now a new can of worms has opened. Your assessment of the current account deficit and export growth this year, but more importantly, next year?
Lata, we have to see it in a broader perspective, firstly. Unfortunately, services now has been dragged in the trade war in some sense or the other. And the way US is now sort of telling the world that, I want to be producer of services as well. So they largely have been consumers, right? So insofar, there was being impacted only on the good side. Now, when they are sort of getting services on board, there are two ways I can understand this bit. One is that US wants to essentially become a producer economy. Of course, it will come with a cost in the medium term. But at the same time, I think it is going to be used as a tactical way for the US to negotiate with India on the ongoing trade deals. That's the first macro impact for us. In terms of numbers, again, you have to see it from 2 or 3 perspectives. The three broad macro channels with which we'll have hit. One would be, of course, remittances. So our broad numbers suggest the remittance impact may not be too much for the incremental potential H-1B workers that would have gone to India, probably less than even 1 billion. So that's not a big concern for me. Of course, there could also be, increased offshoring, as you guys were mentioning earlier. So as of now, Indian companies largely maintain a 70-30 offshoring to onshoring ratio. In fact, and they've been very agile over the last 10-15 years. They've actually reduced their dependence on H-1B visa. And even in the COVID period as well, they were able to sort of shift to offshoring very smoothly. And we saw the, advent of GCC also coming our way. So the BOP impact from the lost remittances easily is going to be offset by, partially offset at least by increased services exports that we may see over the coming years. To be sure, that could also be replaced by nearshoring to countries like, say, Mexico or even in ASEAN countries. So we'll have to keep that also in mind. The third impact would be, of course, the outflow that we see from education-related, remittances, which is outward remittances, which is basically, again, a modest number of around 6.5 billion, which is less than 0.15% of GDP. So it could get rerouted from the US elsewhere, or probably, get reduced at the margin. But at this point in time, the BOP impact is pretty modest, in my view, in the near term. Of course, the medium-term implications could be, severe for IT companies. But, we've seen that in the past that IT companies have been pretty agile and very adaptive in terms of changing their growth model or changing their strategies, business strategies and stuff like that. And they also would have some time in hand, right? Next 6 to 9 months to prepare for this change that is going to hit their margins or revenue.
I actually am worried about the macro more than IT companies.
In the immediate run,
where, almost it's agreed, and, we have an insider telling us that it is marginal, like Mr. Pai. But Mr. Pai, I have more, we are very, I guess we're talking about the medium term in slightly facile terms, because the terrain is shifting in weeks, not in months or years. So I'm worried about the Hire Act. That is clearly 25% tax if you export a service, if you do a GCC. And we've got some kind of a rehearsal in the way NVIDIA was treated. Okay, you export chips to China, but give me 15%. Should we be worried about such a change in terrain even for GCCs?
Datta, you are a brilliant economic observer, all right? Global industry, global enterprises work through structures of subsidiaries all around the world, right?
Yeah.
Apple keeps all its overseas profits in Ireland.
Absolutely.
All the global companies who outsource have their subsidiaries all over the world. What they will do is they'll ask the Indian companies to bill to the subsidiary because it gets consolidated into the US accounts, right? More than 50% of the business of Standard & Poor is outside. The source of revenue outside, which are accumulated, they're in tax-sheltered countries. So instead of billing to the US, you'll bill to Ireland, to the same subsidiary of the holding company. So where will there be a tax? The money will accumulate there. There'll be an income, there'll be an expense, and don't have to pay this tax. So structuring is very easy. So right now, I'm not very concerned about that. And remember, the US is has the net surplus in the services trade, $1.3 trillion deficit in goods, and maybe $600-700 trillion surplus in services. Now, if all countries start putting a 25% tax on the US services, they're going to get hit. India removed the Google tax, right?
Yes.
Just now to keep Trump happy. The Google tax will come back. After that, people don't care.
Yeah.
People will not care. You're putting so much, hurting us so badly. We'll also do that. And American tech companies will get hurt very, very badly.
Yep.
Like China kicked out NVIDIA right now. And China is a very huge market. So I think we've got to watch what will happen. My estimate is all the tech companies will go to Trump and work out a deal with him to say that without having H-1B come in there, and they don't need this kind of a tax on services imports. And if they do, they're going to be in deep trouble. The US dominates the world in technology. If you look at the valuation of the top 10 digital companies, they make up a large part of S&P 500. And they're the drivers of the US economy in terms of capital investment this year, right? And I'm very sanguine about it. Let's wait and see. And you can expect the unexpected from President Trump. But I'm very sanguine that many of these IT companies will fight back.
No, that's very important takeaways. More as the accountants will outsmart the economists, and we can have tax planning. Secondly, we must remember that others can hit back. I mean, the way in which EU and all countries have even declared Palestine as two states clearly show that they are willing to dare. You'll take this much and not further. So we could see that copybook play if the tax, tyranny goes too far. But Madhvi, aside from all this, yes, I do believe that even India has stood its ground in a very dignified manner. But would you worry that somewhere in the coming years, employment growth could be facing some at least near-term challenges because of this, stream of slings and arrows we are getting?
I agree, Latha, because, in the current year, it may not impact the revenues of IT companies, but it will start hitting them both on margin revenue from FY27 onward if this continues. Obviously, as I said, it's a signaling mechanism from the US that they want to localize a lot of this STEM employment. So that obviously will have impact on domestic market as well. But to some extent, as Sir was also mentioning, that there could be offsets that we may see in the medium term. The models could be very adaptive and agile, and we'll find ways and means to ensure that, companies find a way to remain profitable. But clearly, I think there are multiple factors in which, IT companies could get impacted. The demand environment in the US is also going to be difficult. There will be potential inflation in local and existing H1B holders as well as offshore shift, which may also lead to some, wage hit in India as well. So I think medium term, if the IT sector outlook remains a little less certain, obviously you will have impact in the organized economy, where IT segment is, a large chunk of the organized hiring space. So clearly that would be a big hit. And of course, they are the biggest source of services exports for us as well. Even if the GCCs at this point in time are growing in a much accelerated fashion, if there is a higher tax that come into our way, obviously I don't think that would be the case. But in a hypothetical situation also, if we assume that it would end up becoming a reality, I think then we are in a big fix in terms of, the services exports.
No, as Mr. Pai says, the world will always find a way to sidestep the...
Companies have been very adaptive. We have seen that IT companies have been very agile in terms of how they have been, able to sort of play with their models in terms of ensuring that, they remain profitable in the market. So I don't think that it would be...
Unfortunately, out of time, Madhvi. Mr. Pai, thank you very much. This is just the start of the conversation. I think we will have many more occasions. These arrows are not going to stop. And we will need your analysis constantly and your optimistic interpretation. Wrap up on Bazaar. Chartbusters coming up.